Let's take a quick look at the stock market report for the previous week. Now, at the end of last weekday of trading on the Nigerian Stock Exchange, a total of 327,276,903 shares in 7,351 deals, corresponding to a market value of 4,609,386,411 naira 71 kobo were traded. Compared with the previous NGX trading day, that was Thursday, August 22, Friday's data showed 17% decline in volume, 21% decline in turnover, and 11% decline in deals. Now, the current market capitalization of the Nigerian Exchange Group is 55.1 trillion naira. And now to the aggregate, 123 NGX listed equities participated in trading, ending with 32 gainers and 11 losers. Owando led the gainers with 10% share price appreciation, closing at 47 naira, 85 kobo per share, followed by Mac Nichols going up 10%. Total Nigeria went up 9.98%, and Cornerstone Insurance Company up by 9.95%. On the losing side, however, the Initiates came out last with an end-of-day price depreciation of 9.78% at 2 naira per share, followed by FTN Cocoa Processors going down negative 5%, QTix going down 4.91%, and International Brews going down negative 4.44%. Access Holdings recorded the highest volume of 36.9 million traded shares, followed by Veritas Capital Assurance at 27.7 million, FCMB Group 24.7 million, and DAR Communications 18.8 million. Regarding the performance of NGX market indices, the benchmark NGX All-Share Index climbed 255.40 points to close at 95,973.45, representing a one-week loss of 1.16%, a four-week loss of 2.27%, but an overall year-to-date gain of 28.35%. Other remarkable indices that performed were the NGX Top 30 Index, the NGX Oil and Gas Index, the NGX Insurance Index, the NGX Banking Index, the NGX Pension Index, and the NGX Main Board Index. And that's our stock market review for the previous week. We get straight now into the conversation very shortly, taking a look at the fuel scarcity situation and navigating the country's downstream sector challenges. Joining us shortly will be our guest, but before then, let's take a short break. He is a petroleum engineer, oil and gas engineering consultant, and a Nigerian politician, Mr. Martin Onovo. Good morning, Mr. Onovo. Thank you for joining us.
Good morning.
Joining us. So I'm going to start with you, Ben, with us here in the studio. This is a lingering problem. It's perennial, if you want to use that word. And for all intents and purposes, it seems like we find ourselves right back to where we started every other time. In fact, this recent one has plunged Nigerians into more difficulty than they can imagine, coupled with the fact that they have to buy it at a much higher price at this point in time. Some are buying it well over 1,000 naira, But amongst the solutions that there are, the VP, that's the VP of NNPCL, Dapo Shegun, had said something along the lines of, or had mentioned a few of the challenges that, are bedeviling them with regards to delivering the commodity, and then mentioned that some of the causes can be attributed to rainfall, storms, and all of that. In fact, he said that the Estragos Channel, due to siltation, has prevented the flooding of that channel due to siltation has prevented transportation, or has impeded, if you like, the movement of the commodity across the board. Some might say, to take that particular excuse, so to speak, quote unquote, with a pinch of salt, seeing as they are the persons of interest and they wouldn't want to say anything that would indict them directly. But underneath it all, in your view, that is, as a professional and as a Nigerian as well, what do you see is the deep-seated underbelly of all that's going on, and what are the immediate near-term impacts that this can have on the Nigerian economy and, well, of course, Nigerian businesses, as you were.
Okay, thank you, David, for the question. I like the way you landed. How will the root cause of the problem, if we are to dissect it? First of all, let's understand what subsidy is, because the root cause of the problem, in my opinion, is actually subsidy. The way we've practiced subsidy as a country when it comes to PMS is one of the root cause of the issues that we are facing today, and that's why it's perennial. Subsidy dates back as far back as 1970. It was institutionalized around 1977, and when they passed the Price Control Act. And since then, because we had abundance, we were able to really subsidize. But now, what is the challenge we are seeing? The challenge we are seeing is that it has become very expensive for government to subsidize PMS. If you look at our PMS expenditure as a country, even though PMS was removed in June last year.
You mean the subsidy on PMS?
Yeah, subsidy on PMS was removed June last year. You understand that Reuters has projected that we are going to spend about 5.4 trillion naira this year on PMS subsidy. Now, what is the average revenue of the Nigerian government? Nigeria as a country will make a little about 12 trillion naira last year. That's our total revenue, which means we are using 30% of all our income to subsidize PMS. It has become unreasonable for government to continue in that regards, and that is one of the challenges you're seeing. And government has tried to be innovative in the past in trying to solve this problem of cash flow to pay for the subsidy. And that's where you see the swap agreements coming on board, different credit lines coming on board. But the international community, international traders that are giving government these products are also very careful, right? They want to make sure that the money will come back to them at the end of the credit period. So you notice that there is a whole lot of challenges, and not just deep-rooted in one. You have challenges coming from the supply end of the business, right? The people that are producing these products are giving it to government. You also see the challenges coming from, like they mentioned, mother vessel and daughter vessel ship-to-ship transactions, right? You also see the challenges coming with occupied jetty, even to the gridlock in Apapa, the bad roads due to rainy season. All those are contributing factors to PMS. And even to the last mile consumer, you also see high cost of financing. When PMS was removed, I'm going to give you a practical example. The price of PMS was about 182 naira, 183 naira. Today, a price of PMS from NNPC's retail station at best is 568 naira. What that means for someone, an independent marketer, is that the price they can load a truck for has tripled. So somebody that could go to Apapa with 8 million and get a 33,000 liters of truck to discharge in their retail outlets at, say, Obomosho, will have to spend 25 million naira today to also access the same trailer load of truck. Now, that man doesn't have 25 million. So he has to go to the bank to borrow that money. When he goes to the bank to borrow that money, he's getting that fund at close to 35% because of where the MPR rate is. So all those cost factors and elements, and this is just one example, retail end. The institutions are also facing these challenges. So it's a whole gamut of these challenges that are bringing us back, to this issue of PMS scarcity.
That's something we're going to tear apart, as you were, bit by bit, in the coming minutes as we progress with the show. But let's go to Mr. Onovo, who is virtual with us. Mr. Onovo, can you hear me still?
Clearly.
Now, I'm going to piggyback off of what Ben has spoken about, attributing a lot of what we're seeing now to, the subsidy regime, which is at best still wishy-washy. It's neither here nor there. I would go through a brief report by Business Day and the Nigerian Bureau of Statistics. So it's estimated that the federal government has spent about 15.096 trillion naira on petrol subsidies in the last 14 months. That's about a year and 2 months, as you were. Now, this value was obtained from the NBS and or NBS data and information from petroleum marketers, whom are equal persons of interest, very critical as far as this issue is concerned, which Ben has highlighted. So now, according to the NBS, Nigeria imports between 1.6 billion liters and 2.5 billion liters per month, which essentially is indicative of an average of 1.9 billion liters per month. So in that exact 14-month period, that's between June of last year and July of this year, we have, as a nation, consumed over 27 billion liters of petrol. Now, on the other hand, the independent marketers say that the landing cost of petrol and other logistics stand at a little over 1,200 naira, right? And now the NNPC retail sells between 650 per litre at its stations, leading to a differential of about 533 naira for each litre of petrol. Now, with the 533 or 553 differential, and as I mentioned earlier, the 27.3 billion litres consumed in about 14 months, the likely estimate spent during this period is what Business Day and the NBS put at over 15 trillion naira. Now, taking all this into perspective, Mr. Onovo, what do you think of this? What's your take on this particular report?
Well, I'm not going to review the report because the only basis to review that is that you have done an independent study. Let us presume that the report is correct because the figures look regular. What do I mean? Depending on the price of crude and market dynamics, right now, landing cost is definitely over 900 right now. But you know that the international prices vary. So previously, about a month ago, we had estimated and published that subsidy was about 500 naira per litre. So it's not strange to us. So those figures look like the figures we got a month ago. So I'm not going to disown the figures, neither am I going to affirm them. But I'd like to refer to what my colleague said. I think his approach is probably more symptomatic because I won't say subsidy is the problem. I will say the Nigerian dysfunctionality is the problem, which will incorporate many things. And to start, as a major exporter of crude oil with 4 public refineries, we have no business importing products consistently for over 10 years. So that alone is enough index to indicate how dysfunctional the system is. And I'm not going to encourage any symptomatic analysis because that's what has brought us here. These issues have been with us for almost 2 decades. And we do analysis every day. So why don't we have solutions? Because the analysis are not productive analysis. And what do I mean? If we were refining domestically, which we can easily do, then the waste involved with importation of PMS will be reduced. The foreign exchange pressure will be reduced. If you go beyond that, you will have to also deal with the incompetence in the system and then also with the I'm trying to find the right word, with the unimaginable corruption also in the system. So we avoid the incompetence because it's politically correct to do so. We avoid the corruption, then we try to blame the subsidy. We also avoid the fundamental dysfunctionality of being a major crude producer having 4 public refineries, having the Dangote refinery, having 2 or 3 modular refineries operating, and we're still importing. And we keep avoiding that because we want to be politically correct. I'm getting tired of analyzing these issues. Thank you.
Interesting take there by you, Mr. Onovo. You're coming from the more, if you like, direct angle to tackling the situation. And I'm going to take that up with Ben here with me. And Mr. Onovo has said a lot of things, bordering more on what a lot of us are seeing, but are for some reason a bit reticent about, and not very, very forthright with, saying things as they are. Earlier, you mentioned one of the, players, of course, very key player, the NNPC you mentioned. And Mr. Onovo has also mentioned some factors, including incompetence, which he spoke about, corruption, which he spoke about. And, generally speaking, they all fall under in his words, that is, the Nigerian dysfunctionality. Now, let's take the NNPC, for instance. You've had marketers say that they've not been able to get what's it called, petrol, supply from the NNPC, and they've had to, source for it elsewhere. And then you also have the NNPC, for all intents and purposes, doing what they're doing, and you have the NNPC boss, for, again, all intents and purposes, giving us rhetoric after rhetoric, and then you wonder why. You find individuals like that who for a long time have presided over matters about the NNPC, and it hasn't gotten any better under his watch. Why he's still there? That's one question which Nigerians are asking. Another is neither here nor there, or if you like, the dysfunctional dysfunctional FX regime currently as constituted. So, putting all of that into context, along the lines of what Mr. Onovo has spoken about, pointing to incompetence, pointing to corruption, and then, of course, don't get me started on what we saw a couple of weeks ago with the Dangote refinery, where it seemed like the powers at play were more concerned about themselves as opposed to the Nigerian public, who were, groveling. Looking for the commodity and just wanted something to change. We have refineries that aren't working, and we have trillions over the years, that is, pumped into trying to fix these refineries, and we come right back to where we started. And then you have a Nigerian who, has established his, with good intention, of course, to make the lives of Nigerians easier. And then you find these bottlenecks here and there, these hurdles here and there that he has to scale. Again, lastly, before you go on, that tussle led to questions being asked as to whether or not the powers that be actually want Nigerians to have an easier lease of life. What are your thoughts? I know it's a lot to unpack, but
It's actually a lot to unpack. But, I'll try and pinpoint the root cause of the problem by asking you simple questions. And also my...
Mr. Onovo, that is.
Yeah, Mr. Onovo, yeah. Is diesel scarce today in the Nigerian market?
Mm.
Is kerosene scarce today in the Nigerian market?
Mm.
Is LPG scarce today in the Nigerian market?
Mm.
All these products I've mentioned pass the same cracking process as PMS. They still have the same supply sources as PMS. But in the Nigerian market today, those products are readily available. And what is the difference between these products I've mentioned and PMS? The simple answer is subsidy. Now, why many people might think that the root cause of the problem is not subsidy. For someone who has a 360 view, you understand that the root cause of the problem is actually subsidy. And it goes beyond just subsidy on PMS. Go back to the capitalist regimes. You understand that price is the true allocator of resources. Now, why can't you have investments in the downstream sector? Why can't you have refineries producing Nigeria has 4 state-owned refineries, 2 in Port Harcourt, 1 in Warri, 1 in Kaduna, combined capacity of 445,000 barrels per day. Nigeria thought refineries were the problem. They gave modular refineries to 25 players. Only 6 were able to bring those refineries to life. Now, is any of those refineries producing PMS today? The answer is no. Yeah, inefficiency, I hear you. Corruption, I hear you. But all those things don't exist only in the PMS process. It's something we've come to see manifest in our society. Are other aspects of our society this dysfunctional? The answer is definitely no. So why can't you get other players to come into the sector? It's because of subsidy. Why can't you get other alternatives to function well? It's because of subsidy. And okay, let me give you a practical example. Why do you think PMS smuggling is thriving in Nigeria? It's because the product is subsidized. Forget the average Nigerian and all we have, we know all that. But if there is no opportunity for smuggling, let me give you an example. You mentioned how many billion being consumed? About 2 billion every month.
2.7 something billion every month.
Yeah. Go and check the data. In 2018, government paid about 2 trillion naira in subsidy. Consumption for 2018 was about 15 billion liters. The next year, 2019, government paid about 500 million in subsidy. The consumption halved to about 8 billion. Let me even bring the experience reset. So the question you begin to ask yourself is, what is happening? There is a direct correlation between the amount of subsidy paid and the products that are being consumed, allegedly smuggled out. Because if there is no incentive for the smugglers to move the products, they won't move the product. If, as a rational being, you calculate smuggling the product, it becomes unprofitable for you, you won't smuggle out the product. Let me give you another example. In 2022, NNPC came out to say that, we'll consume about 103 million liters of PMS. But out of that, over 50 million is smuggled out of the country. And if you look at the data before government removes fuel subsidy, we are consuming average of about 70, 80 million of liters of PMS per day as a country. However, immediately, government announced subsidy is gone. Look at the data. The week following that week, consumption dropped to 35 million liters. Why? Because price adjusted to meet market conditions. And it dissuaded what? Smuggling. Nigeria removed subsidy, but it was a neighboring countries that was, protesting. Because it's no longer profitable to smuggle out the product. But what happens? Subsidy exists where a product price is fixed. There is no other way around it because market forces are dynamic. They keep moving. So since government has held that prices, the major factors that are driving the cost of PMS have already moved. When government removed PMS, don't forget, exchange rate was what? 770 naira to $1. Today, we are buying dollar at 1,600. That's more than 200% increment. Crude oil price was hovering cycle at about $80, $90 per barrel. Today, crude oil you are buying close to $100 per barrel. So all those factors have necessitated what? Decreased supply. Remember, when government removed subsidy, they gave license to independent marketers to go and import PMS. What happened to the first set of marketers that tried to do that? The 3 companies I will mention their name, they got their fingers burnt. Those in the industry know how many billions of naira they lost. Now, where does that place us as a country? It means that we only depend on NNPC and government to do what? Import PMS. And because that is a quasi-monopoly, you can't see what? The market play. So even if we have multiple refineries in play, even if we're able to somehow get the capacity of those refineries to increase, the problem is if the product pricing is not right, they will continue to be scarcity. Dangote will produce his PMS and he will not sell it in Nigeria because it will not be economically viable for him to do so. The other refineries will produce, they won't sell. One of the things we saw causing scarcity was when Dangote began to use more of the bigger and larger vessels to move their products, creating a quasi-scarcity in the vessel and maritime business. That is one of the things that's contributing to this scarcity. Like I mentioned, it's a whole gamut of factors that are contributing to the gas scarcity.
Okay. All right. Very interesting points you've made, particularly where you talked about monopoly. Now, currently, most stakeholders in the industry are also very concerned about a shift in that particular monopoly because, just as you said, and rightly so, the NNPC, for whatever reason best known to, the players, the powers that be, are still the sole importers, as he were, despite the fact that, it's been, some sort of an open market lately. But then again, you have Dangote, for all his good intentions and all of that. It's also being said that there's a chance that it could shift from the NNPC to Dangote at this point in time, because he would then become the one who is spearheading matters. But let's go on a tangent. Mr. Onovo, now the independent petroleum producers group in the country have had some of its members issue, letters and circulars, as he were, from the, have had some of his members rather being issued circulars from the NUPRC for supplying certain quantities of crude oil to the domestic market in the second quarter of this year. Now, these are quantities that they believe to be based on the demands of refiners, the likes of Dangote and the rest of them, rather than the actual local consumption needs, which they say could pose an unfair disadvantage to producers as well as, other related stakeholders, and as such, they have warned against mandatory crude sale to local refineries. Do you share the sentiments, Mr. Onovo?
Sentiments, but before you run off on that on that tangent, I think we need to deal with these issues for clarity, because these technical arguments are self-defeating, and we have used them for a while because it favors government and it has put us where we are. We have gone from number 1 in Africa to number 4 by size of the economy. And this is the kind of very destructive technical argument that you see in the public space, which in my opinion needs to be clarified. Number 1, when you import what you produce, is that a free market? No. That's a fundamental dysfunctionality. So it's erroneous to call that a free market. When you smuggle the products that are imported and then blame the cost on subsidy, that's a direct misrepresentation. When you refuse to fight corruption and blame subsidy for the cost of corruption, that is corrupt in itself. So, and also asking that only the PMS supply. It looks like you have lost your voice.
Mr. Onovo, can you hear me?
Yes, now, clearly.
Mr. Onovo, can you hear me? Just to interrupt your thoughts a little
Clearly,
bit.
yes.
There's always been an interplay between subsidy and, the endemic corruption which we see. As a matter of fact, it's been said, we're tired of hearing it, that that subsidy is essentially what brings about, the advantage for said corrupt individuals who latch onto it to impoverish Nigerians. So you cannot,
sorry,
separate
please.
one from the other.
Sorry, please.
Can
sorry,
you?
please. Sorry, please. You have a tendency to ask too many questions, and I may forget some of them. It's not your fault. It's my fault. Let's deal with what you just said. Is subsidy on PMS the cause of corruption in the judiciary? Please. Wake up, please. These technical arguments are very, very intolerable. These are false and intolerable. Now, is a subsidy on petroleum the cause of insecurity? Why would my colleague insist that the dysfunctionality is only in the PMS supply sector? That's not true. Secondly, this kind of argument where you encourage inefficiency, because if diesel is locally refined, it won't be 1,400. It will not be. It is the inefficiency of exporting and importing. So we leave the fundamental argument and hang on to the technical arguments that are only in proper professional context used to fine-tune. We disregard the fundamental and hang on to them in order to sound sophisticated, and everything has gone haywire. Excuse me, the diesel we're talking about is the one now that is polluted. Is it the subsidy that is polluting the diesel? Is it the subsidy that's putting it at 1,400 per liter? It's the dysfunctionalities that are fundamental that we are avoiding and which we must deal with. Let me tell you, Niger is refining. Ghana is refining. The major turnaround in Ghana cost, the phase 1 cost 360 million. The phase 2 cost less than 100 million. That was $500 million. You have budgeted $2.7 billion for your own. You have not done anything. And then you think you can ignore all that and use technical analysis? Please, you can only employ free market analysis to a free market. You don't apply it to a skewed market. And every country that ever developed in the world developed around this competitive advantage. In Nigeria, what is the competitive advantage? It's oil and agriculture. You destroy it with this kind of technical, intolerable arguments. Please. Like I said,
All
I'm
right.
getting tired of
Very
this.
well
I'm
said,
getting tired
Mr.
of this kind of
Martin
analysis.
Onovo.
I'm getting very tired.
He seemed to be at variance with your thoughts on the issues, particularly when it comes to the causative factors, as he were. But so that we don't flog a dead horse, let's talk about the overarching, effect on Nigeria's economy and our position as oil producers on the continent and by extension globally. I reckon that a lot of our revenue comes from that sector, and then with the upheavals in the sector, it puts a bit of a question mark on where the rest of it is going to come from. Of course, we know that there are taxes and other forms that and other sectors where the government gets the revenue, but the bulk of it, if we're being honest, comes from this sector. Now, I'm worried, particularly as a Nigerian, not a player in the oil and gas sector or in the downstream sector of the country. I'm worried as a Nigerian. What happens to things like FDIs? For example, just to digress, in the case of insecurity, if I were an investor, I wouldn't want to come to your country because your country is insecure. In this case, where we have, upheavals in our downstream sector, as an investor, would I want to come and, do my business there in the sector? I'm just thinking, just spitballing. What are your thoughts?
Okay, thank you very much. I'll get to the question, but I would like to set some things very clear.
It's very briefly. We have very limited time.
Okay, thank you very much. Sentiments cannot get us anywhere as a country. And I see so many people attach sentiment to this problem of subsidy removal. The reality remains that when Dangote began to produce AGO price in the market was about 1,400. When you remove the transportation costs as a component, it was able to bring down that price to about 1,200, and market is gradually going back to that point. The reality is that the domestic refineries will not bring down the price of PMS below a subsidized pricing. Like we've rightly identified, independent marketers, my colleague, the price of PMS today, landing cost, is at above 1,200. Today, NNPC pricing is 568. There is a whole gamut of 600 naira there to cover.
Okay.
And so,
Ben, let's get to the question, please.
Sorry, just recap the question.
Yes, the question is, what does it do for us, our image as oil producers, both continentally and globally?
So the truth about foreign direct investment is that investors, because I've sat in the room across with them, they are not ready to invest in a heavily subsidized environment because it will not allow them to recoup their investment.
Okay, fair enough. I would land you on that very note. Now, Mr. Onovo, as we go very quickly, very quickly, if you can just, adhere to brevity, give us your thoughts on what you think, as an industry player, what you think could be, if you like, the silver bullet to killing this problem once and for all. And I say that, tongue-in-cheek, because, of course, with this sort of issues, we always come back to them. But if you were to hypothesize, what would be, in your view, the solutions to what we have currently?
Every informed current affairs analyst knows the solution, and I can cite the authorities. NLC has the same solution that we have. Pengasam has the same solution that we have. TUC has the same solution that we have. The ruling party, the culprit, the ruling party, has the same solution. It is documented in their manifesto. So that's very clear. That's very clear. Trying to confuse issues cannot help us, and it has not helped us. Insecurity affects all of us. If you normalize the data, Nigeria is the authentic, verified, confirmed capital of extreme poverty in the world. Just normalize the data. And you will see that it's very clear with normalized data. So let's not continue on these high-sounding technicalities over simple issues that are very clear. What is it doing to your GDP?
You haven't exactly
no, finally, one sentence, one sentence, one
Thank you
sentence,
very much,
one
Mr.
sentence,
Onovo.
one sentence.
This has been Market Insight on
one sentence.
SOUQ News Television. We've been talking about the perennial and almost incessant fuel scarcity issues and navigating the complex problems we have in our downstream sector. We've been joined this morning by Mr. Benignus Nnamdi Okorie. Joining us in the studio, he is a chartered accountant and the founder, Najem Business Solutions. Many thanks, Ben, for joining us on the program. And also virtually having joined us, Mr. Martin Onovo, a petroleum engineer, oil and gas engineering consultant, and a Nigerian politician. Well, of course, you can say that that's a no-brainer, if you like, considering Mr. Onovo's submissions. But yes, thank you very much, Mr. Onovo, for joining us. As we wrap up, of course, Nigerians just want to see solutions. If they know that they can get the commodity, I reckon they will be willing to, support whoever it is that would make that commodity available for them. Just the needs of life, essentially. It makes everything, it makes the entire wheels of living and governance, as it were, turn. And we're hoping that sooner than later, we'll see an end to this lingering issue. Has felt like a monkey on our shoulders. Before we go, we'll take a quick look at the currency market for today. The dollar is trading to the naira at 1,525 naira, to the pound sterling 2,044 naira, to the euro 1,736 naira. That's all on the official market. On the parallel market, we see the dollar to the naira trading at 1,577 naira, 2,081 naira to the pound sterling, and 1,763 naira to the euro. That's about it on the currency market outlook for today. And overall, we'd like to say a very big thank you to you for watching Market Insight for today, Monday morning here in the city of Lagos. And also, again, special thanks to our guests, Mr. Ben and Mr. Martin, for joining us on the program. Do stay close to your sets, your television set and your mobile devices, as you wear more engaging and insightful programming coming up on SOUQ News Television. Until tomorrow, Market Insight returns. I am David Chiedu. Good morning.